Welcome to Silicon Valley Asian Business Talk.
So hello, everyone. This is Roger Chen from University of San Francisco Center for Business Studies and Innovation Asia Pacific. First of all, welcome Larry Lee, and thank you for supporting us. Would you please briefly introduce yourself?
Hi, Professor Chen. Thank you for your invitation. It is an honor to be working with you. As myself, my name is Larry Lee. I have more than 600,000 followers on Douyin, or the Chinese version of TikTok. I'm a founding partner of AMINO Capital. The fund has been around for more than 10 years. We're headquartered in downtown Palo Alto. We invest almost 300 companies, and more than 15 of them become a unicorn, and more than 30 of them grow into 100 million to 1 billion valuation companies. We have quite a few partners who has been working together with me on the fund, AMINO Capital. We are very technical. Most of them has a PhD in science and engineering. Myself, I have a master degree. That's why I have a called Master Lee, but now this name is not may not be politically correct. So we need to think about a better English name. Very fortunate we got on the Midas list last month, which is like the Oscar for investors. And also, as I mentioned, during the pandemic, in order to work, to communicate with partners and entrepreneurs, I get on the TikTok. Also, during the pandemic, I wrote a book together actually with my team. The title is The Logic of Investment. It's published by Tsinghua publisher. It was written last year actually, but during the pandemic, it was published early this year.
Discussion topic: good venture ideas, small with big potential.
Let's kind of go to one specific area which not only venture capital are interested, but also entrepreneurs are also interested, which is evaluating the size of the opportunities. Because in your book, you also mentioned you, as an entrepreneur or a venture capitalist, you not only need to look at the total addressable market, but also the market opportunity that belongs to a particular venture. For entrepreneur that belongs to your venture. So could you elaborate, how do you kind of evaluate such market opportunities?
For entrepreneurs who actually work on a specific project, it is very important to make something that's useful to some people, not to all the people. Because for early stage or when you just get started, it's very difficult to get into an idea or services that everybody will want, because that kind of thing is for big companies. As early stage startups, you really want to look at something that's very niche, very niche. There are some people who love to use it, but has not got attention from big players yet. So that's the best way to get into the market. But if the market is going to be huge or not, depends on the trend. You really need to figure out, are you doing something using the latest technology? Are you doing something that with the technology development, your opportunity as a company will be much bigger, much larger than the existing players? So the best way to evaluate if a market has a huge potential is by thinking of what kind of new technology that will empower you. And then what kind of social or economic or political trends that will make your product more useful. So that's how you look at it. Because for startups, for early stage, it's very difficult to find an opportunity that's huge, obviously huge. That's not possible. You really have to get into the niche and then grow from there.
That's very, very, very insightful point. Like start with a very, very small, specific field than to kind of project from there. Relating to that, because you know, in your book, you also have a notion that analyzing or forecasting industry development trend is not that important for venture capitalists. So that's a very interesting kind of a point, which seems to me contrast with your early point, also with other people's view. So two questions. One is, what do you mean by this particular point? Second, does this notion also apply to entrepreneur, which means even for entrepreneurs, it's not that crucial to forecast the industry trend. If that is not important for entrepreneur, then what is important with respect to analyzing the market opportunities?
Right. I think a professor is a professor. So it's a very sharp question because on the surface, it's contradicted to the first question, right? On the other hand, if you think about it, now we're all talking about NVIDIA, right? Last Thursday, the stock.
Oh yeah, NVIDIA, right.
Yeah, went up 24%, like close to a $1 trillion company. But when Jensen Huang started a company, he's not thinking about really AI. He's thinking about the graphic, to process the graphic for gaming. So that's all he's thinking about. And at that time, the chips was designed for logical calculation, for numerical calculation, not for graphic. So all he wanted to do is actually to do the graphic chips. So that's a so-called the future, the kind of the foreseeable future for him, right? But in the end, because to process the graphic, you really have to do the parallel processing. And then when the AI take off, his company's valuation just take off. When ChatGPT become really hot, and then his company just close to $1 trillion company. So the point here is, for entrepreneurs, you really need to think of the big picture, the big trend, but not exactly what will happen. What exactly will happen depends on so many things. It can go so many ways. So for entrepreneur, for a business person, the most important thing is to be adaptive, to adjust based on the market condition, based on the latest information. You always need to adjust the directions of a company. And you always need to adjust your team to acquire different kind of talent based on the latest information. So that's what we mean in the book, where you should not try to exactly predict what's the future. Because for the founder of NVIDIA, he might not predict the AI will make him so rich. He did not predict the AI will make NVIDIA so big. He was only thinking about the graphic, the process of graphic for the graphic more efficiently. That's all. Same thing with Google, right? When they started, they just do a search. That's it. And then they keep changing, keep adapt to the new technology, the new social need. But that's what we mean here is there's so many things going on. There are so many factors can change the market direction, the people's need. There's no way you can predict that. So the best way to do it is adapt. So we always emphasize like what Darwin said, right? It's not the strongest survive. It's the most adaptive that survive.
Right.
Discussion topic: New ventures, how to build data competitive advantages.
In your kind of overall analysis of the new ventures you invest or not invest, one of the key kind of a component is the so-called competitive strength or advantage, and also whether those ventures are able to sustain those competitive advantages. Could you elaborate, what are the indicators you typically look at it to tell you whether these new ventures have or, has or does not have the competitive advantage, or whether those advantages are sustainable or not sustainable?
Right. So actually the currently with this AI, and it's very difficult to keep competitive if you just don't change anything. you always have to be creative. I always have to be very focused, customer focused. So that's only two things that can make you survive, can make you thrive. Any repetitive work, right? Any repetitive work, it doesn't matter if it's physical or mental. Repetitive work will be replaced by either machine or computers. Specifically with the ChatGPT, right? Even you write an article, the GPT can write a lot faster, a lot better. So, but you have to be creative. So for the company to be more creative and to be more customer focused, the real effect, the real result is the accumulation of your customer, the interaction with the customer. And then that's a result of accumulating valuable data. And then based on the data, based on your interaction with the customer, you improve your service. That's the real moat. That's the real moat for a company right now. Actually, that's the one we call so-called data moat. That's the only moat. Everything else is replaceable by other people or other companies. It's easy. It's easy. The talking is cheap here in terms of accumulating data. In order to do that, you really has to be very creative. You really has to be very customer focused. Just like I have a lot of examples in the book, but some of them, because I gained this insight from a lot of portfolio companies I have invested or I have advised, but because many of them are confidential information. So in the book, I based on those experience, I find some similar stories in the public domain. So in that way, I can explain things with a good example without disclose a lot of confidential information of the companies that I'm working with. In this case, I want to give an example of Google, right? Google has market shares, search shares of 97%.
In the search business, right?
Yeah, in the search business, has 97%. Actually, it's like a snowball. When they get started, people like to use it, and then people start to interact with it. So basically, my partner, Dr. Hui Kan, said, for Google, the customer reaction actually counts a lot more for the success of their search than their own algorithm. User behavior is how user can interact with your system that provides you a lot more insight, a better intelligence. So that's why it doesn't matter Yahoo or Microsoft spend billions and hire many professors or PhDs, they cannot catch up because they don't have the user interaction anymore. Well, same thing is here now, like OpenAI now get the initial attraction, then Google's stock valuation go down by 100 billion.
Yeah.
Same reason, because the expert concerns that if people start to interact with OpenAI or with Microsoft, then there are less and less people will interact, will use Google's service. Then that snowball will stop rolling, and then Microsoft's snowball will start rolling. So that's the real concern. That's why one ChatGPT can make $100 billion difference for Google stock. So this is the example. Just back to the original question. This is so-called the data moat. Once you have a data on the surface of data is really the customer that you can track. That's the real competitive advantage. Yeah.
Thank you. Actually, this is very, very good example. You basically give us a detailed explanation. So in your sense, actually, first of all, in your example, the real advantage comes from the data, but data is not very simple concept. Data actually behind the data is the continuous interaction between the company and the customer, which give the company more and more insights. And also, because it's very sticky, so they do not switch to the competitor, which give the company a lot of competitive advantages. And you use the Google and OpenAI is a great example.
Yeah, same
Right.
thing here with my book, right? It's a book in Chinese. I sold on JD, but also in US, I put it on Amazon. Actually, without the cost of the book itself, every book from Amazon they charge like $13 per book.
Oh,
So if the cost of the book is like $9, then the total cost actually is 22 or some dollars already. So Amazon can charge me so much because they have the data mode, right? Because I want to put on Amazon, people can write a comment and people can communicate. That's the value they provide, and that's how much they charge.
Discussion topic: we invest in founders with these traits and indicators.
Because you are a very successful venture capitalist, and in audience, a lot of people are interested in knowing, as a VC, what's your investment thesis or investment philosophy relating to generative AI companies? Because that reflects your view about what kind of companies have future, what kind of companies don't. So tell us your AMINO Capital's philosophy or thesis relating to investing in generative AI space.
Okay. That's a very good question. So we touched bases a little bit just now. For a company to really have competitive advantage, you really need to have the data mode. In order to do that, sounds simple, but in order to do that, the team has to have certain characters. So when we look at the company to invest, the number one we look at is the team. The data is just a result, right? So we need to look at the team. There are many interesting stories and criteria we can talk about, but there are a few I can just mention here. One is the team complementary to each other. If I see two or three founders come in, if they're not complementary to each other, they're not strong. That's not only the problem. The second problem is if they are not complementary to each other, then they're easily to get into a fight. Because if one person can replace the other one, then there's no long-term collaboration. It's a human nature. You have to need each other. So we see a lot of, actually the number one failure, the reason for number one failure for startup is the founder cannot get along. The reason they cannot get along are twofold. One is they don't know each other. Secondly, they don't know each other long enough. They haven't fought before. They haven't worked together for some time before. So it's easy to split. One team split is different than divorce, right? The divorce, you can still split your asset, right? Somebody has a house, the other one has a car. But when entrepreneur divorce, they just destroy the company because they start to fight, and all those legal costs can cost millions. So the company just is over. It's done. Nobody wants to invest and nobody wants to work for them. It's done. So number one is the team. Our team can work together. That's number one. So that's why we look at the team carefully, because for early stage, we don't have a lot of information about their product, how people, they can do, right? So we look at the team, number one. Based on this one, we discover very interesting things. If three people come in, if one of them speak with accent, they have a much better chance to be successful because they are very diversified.
Oh,
that's not a joke. That's a real. Yeah, we'll have. That's a big topic. So why a team with immigrants, especially with the recent immigrants, will be much more successful than three guys that have been never go anywhere else. That's a big topic, but that's an interesting thing we want to share. Yeah, if three people come in without speaking with accent, I'm concerned. So complementary, that's a so-called complementary. Yeah. So that's a number one. Number two is adaptive. So I don't want people to just fixed-minded, because they really have to be flexible, right? As a startup, you experience so many difficulties, so many hurdles, so many unknowns. You got to be flexible. You cannot just hit one thing, then keep working on it without work around it. So that's the thing we like about entrepreneur. If they see some problem, they try to fix it. If they cannot fix it, they work around it. Just don't just stick to it. Yeah, it's the resilience is more important. It's not that the hard way of charging ahead. No, charging ahead, that's a hero. As we talk in my TikTok show, hero cannot live too long. In all the movies, all the heroes, they are very brave, and they make themselves very visible to everybody, and yeah, they want to fight. But they cannot live too long, actually. Most of the heroes die early. As a business leader, you got to live longer because you are responsible for your employees' livelihood. You're responsible investors' money. So live long, be resilient. Don't be a hero. Yeah. So that's the two factors I look at the team. But the result is you can accumulate data. We don't like the team who just work as a consulting company. There's no accumulation. That business model has been several hundred years already. So there's no future for that so-called consulting business model where you pay by hours. You can never stop working all your life, pretty much. So consulting model is a no-no for startups, for good companies. Yeah.
Actually, I have few very follow-up questions, because your comment leads to some very, very interesting point. First, I just try to confirm, because you say you like teams with, of course, that joke, people kind of with speaking accent, meaning immigrant. Mm-hmm. So is that because you felt the immigrant, you like immigrant as one of the founders because they are more diverse, and typically immigrant is more resilient? Is that the reason, the logic behind it?
There is a kind of a self-selection where people want to leave their hometown and go to a place 1,000 miles away, and just they're relatively brave, right? So they're more like a self-selection. Actually, even more important, they bring their own culture, their own way of life, their own way of thinking. So that's something. I don't mean that that way of thinking, that way of life is better than American. No, I don't mean that. I mean they have something of their own. And then when they come to American, only if they really calm down and learn what's going on here, learn all the cultures, all the technologies here, then they have a two trade, right? They have tools, right? So if you come here as an immigrant, if you don't learn, if you don't study hard, if you don't try to adapt, then you have no advantage. But only if you really learn from the people here locally, then you have two tools. You have two toolbox. Yeah. For people who never go anywhere else, most likely they have one toolbox. So that's what makes some immigrants more successful than others, because they have two toolbox. And of course, for people who travel a lot, been to many places, and then they have many toolbox. But that's the thing. It's not because the immigrants is smarter than the local people. No. If they learn, then they have more toolbox than the local people.
Great. Thank you. So the other question is, because I think this is also a valuable question, because you really kind of value founder teams who are resilient, adaptable. But when you make an investment decision, how do you know, what are the indicators that tells you this team is more adaptable, or at least to give you some confidence that they are adaptable rather than fixed thinking or very stubborn type of people?
Then that come back to the experience. Although they are relatively young, but what they have done is how fast they have grown. Like, it doesn't matter they are 35 or 30. It's in the last few years. What have you done? What have you changed, right? Some people within few years, they learn a lot. They go up so fast. Some people, they stuck to one place for a long time without much changes. So same thing with that's only so for, in terms of the social status. Secondly is the thing, we look at the thing, the product or services you have produced so far. Then we ask you, how long have you working on this, right? So then we can evaluate for this amount of work. Maybe you say, oh, maybe take the team of 3 for 1 year. Then if we look at this, because we are technical, we look at this, for normal Google guy, probably this thing will take 3 or 5 years, and these 3 guys takes 1 year, so they are smart, right? On the other hand, if I look at this, I can find a friend that can get this done within 3 months. So that's how fast we evaluate. That's how we evaluate how good the founder team are. Basically by what they have done so far with the amount of resources they have used.
Discussion topic: specific benefits early adopters create for new ventures.
In your book, you talk about the value of so-called super users or super customers, right? So could you elaborate, what do you mean by super users or customers for new ventures, and why they have a special value, and why you really emphasize on that?
Right. Actually, this concept is not that new. For SaaS or for social media, for all those kind of software companies, because we're very focused on software, right? So the early adapter, the people who use your product early and like it, they are the minorities. But those are people that are very, very valuable to you. So you really need to listen to what they say, what they want, because they like it, because they need it. There's a good reason behind it. Try to understand it, and then go beyond what they want, because you make them really happy. Number one, they interact with you and they tell you what they want. That basically give you feedback. Those feedback is very valuable, very valuable. Secondly, you treat them well, and then they are doing the free selling for you. They will tell their friends, their colleagues. That's like the Zoom, right? You use Zoom, you like it's free, you tell your manager, say, you know what, we need to purchase because we need to have longer meetings. This is really useful. So they are the advocate for your company, for your product. So those are people who are paying to work for you. So those super users is really the valuable asset of your company. Even before that, now we have so-called design partners. For some startup companies, they want to do something very specific for a specific domain. For example, if you're doing a software for dentist, right? It's very important for you to find a dentist that can work with you. They so-called design partners from the very early stage. So they will tell you what they want, and they will just keep using this product and give you feedback almost hopefully every day. And that's called design partners. They're not the customer. You see them as customers. You see them as partners. So those the new way of implementing system right now, design partners. So try to work with those people. They are very valuable, because right now you have to work on the very specific systems to get started, right? So you cannot work as a company. You don't do generic things too much, right? For example, the professor started the TCP/IP. Well, everybody use it, but professor who invented TCP/IP doesn't make a penny. So you really have to make something very specific and used by certain people who are willing to pay. So it's very different, being a professor and being an entrepreneur. You have to make something people really want to pay.
Discussion topic: an insightful story and lesson on scaling up new ventures.
Based upon your very rich experience, observations, can you maybe identify or share with us, what are some of the mistakes you have observed? What are the typical, kind of wisdoms or, advice on how to search for or go through this product market fit process? I know this is very generic. You can pick a few examples that you will remember to share with us about this extremely important, yet could be complicated generic questions.
Actually, you have to try, right? Number one thing is to try. So it's not obvious. Like we are the angel investors of a V, right? A lot of Asian people use a V. So it's not a straightforward road for them. Now they are relatively successful, right? They are.
Maybe, Larry, could you just give us one or two background information about this company so people have the context?
Right. The company's name is a V, called WEEE exclamation mark. So this is a Asian food delivery startups. And when they started, they are like it's very different. So when they started, there's like an organized community neighborhood together. They bound together to say, oh, we're going to buy some dates. So there are 20 families like it, want to buy, and then they sign up, and then they buy a large quantity of dates, and then they got a discount price. And then it's a big bag of dates come to one family, and then they split the dates into 20 families, and then that's it. So initially, it's like a community batch purchasing. It works okay by starting a lot of small communities. People start to so-called serve themselves. But when you go a little bigger with more product, things happens, right? Because number one, the delivery time is not guaranteed, right? If the 25, they're all busy, then, right? Secondly, the quantity, how to divide, and all kinds of things happens. And it becomes too much work for one family if that family initially just want to help. So then in the end, they started to hire, the company started to hire a driver. See, the business model change, right? When you start to hire driver, then you have a fixed cost. And then the business has to pick up very fast because otherwise you have 10 or 20 drivers sitting in the warehouse. So then they have to figure out when and where to hire drivers. So that's one step ahead. And in little by little, there are more and more drivers coming on board, and more communities converted from those self-serving community to serve by the V platform. When you do that, if you're not careful, then it will cost you a lot more money as a company because the driver, if there's no work, you still pay. They're sitting there, you still pay.
Yeah.
Yeah, and that's not second step. Then third step, you get this thing from initially from the farm, the vegetable, right? Directly, the driver pick it up and then send to each home. After a while, there are too many drivers go to the same farm. And then they have to set up their own warehouse. See, when you start a warehouse, there's not a fixed cost there. So you really have to grow the company one step at a time. And then they become profitable in the Bay Area. And then they have to, in order to go national, they have to go to another metropolitan area like Los Angeles. Then they have to go to a different, like a New York area. But each area is very different, right? The density of Asian population is different. The warehouse location is different. So for each location, you have to be very careful to use a different strategy. So all those things can tell is when the company grow, there's no one magic moment. It is really one step at a time. Because when you move on to the next step, you solve one problem, then you will see another problem. And when you solve the next problem, and then you find new problems. So it's really, entrepreneurship is a journey where you step up one step at a time. There's no foreseeable future where you can see, oh, this is one magic moment and then I'm done. That never happens.
Discussion topic: fatal mistakes startups tend to make due to human nature.
What are the other observations or wisdoms leading or fail new venture company, either during the growth stage or searching for the product market fit that you have observed? Just like you gave us a great example, other wisdoms that you can share regarding the growing or scale, searching for the product market fit. Even failed examples.
Right. There are two aspects. One is never become complacent. Well, sounds like it's easy, right? Oh yeah, we work hard. No. One thing, for example, all the good startups eventually become successful along the journey. There are always moments where they don't have a lot of money. There are always those moments where their money just in the bank only lasts them for a few months. So never think you have enough money. Always raise money when time is good or opportunity is there. Don't think, okay, money is not important now, I have enough. No. For all those good companies, they always experience that. Like we invest quite a few unicorns, company, they become a unicorn. Now they are very successful. All of them has a moment when they're almost running out of money and they're running around and they talk to like 10 or 20 or even 50 VCs without getting investment. They all experienced this before. There's no single company that has an exception. So easy to say than done, right? Say, don't be complacent. A lot of people will. Many CEOs, many startup founders will. They will at some point feel like, wow, I'm good now. I can get money. I can get all the money I want and I have plenty in the bank. No. So don't become complacent. There will be moments where you don't have money. You need money really bad. So that's a lesson learned. A lot of like doing a company is like swimming, right? You go up and down, up and down. There will be moment you are under the water, your head under the water. You cannot stay there for too long. Same thing with the company. There will be time you are under the water. Your head is under the water. You have to get up quickly. Yeah. So that's something.
I think, Larry, this is a very, very good advice to many entrepreneurs. Always, have like, this kind of a crisis mindset.
Right.
Be prepared for those crises. That's great advice.
Secondly, is change quickly. If you think something you need to change, don't wait. If you see some signal, take action. The signal is there. Most of people could see it, but many people don't take action. Like, for example, we invest some companies, right? They like hiring, they got the $2 or $3 million, and then they hire 15 people very quickly. And even when they don't have any revenues, after a certain time, like their runway is only like 1.5 year. That's how Silicon Valley startup raise money, right? Only 1.5 year. After 1 year, if they don't see any good result, they should change. They should let people go. They should start raise money, but they don't. They don't. They run the company until they are running out of money. Why? It sounds stupid. Actually, it's not. Because they always hear some customers say, okay, if you do this more, I might pay you. If you do this more, I will pay you. And the engineer will tell them, give me a few months, give me 2 weeks. I'll get this done. This will be good. And the investor will say, oh, let me wait and see. Maybe I'm interested in investing, but I need to look more data. I need to come back to you next month. Everybody sounds like a drag along, but you got to get the signal. You got to say, oh, okay, no problem. Although I don't have a lot of money, but my customer says they might pay me next month. My engineer says they will get it done next month, and the investor will invest next month. No, if you only have 6 months of runway, start to lay off people today at this moment. If you don't get the money in tomorrow, let people go. Downsize your team. You can survive. It's so easy, right? Sounds so easy. No, many CEOs don't do that. They run the company until they don't have cash. There's so many of them. By the time they reach that moment, they come back and say, oh, Larry, I should have downsized my team so that I still have 2 or 3 or even 5 core people I can continue to work. I can wait for opportunities. No, most of the people don't do that. They hear all the stories like, oh, next month will be better. No, don't wait till next month. Today, downsize today.
I would thank you. Actually, I would say many entrepreneurs probably will like your advice as well on this, right? It's just, I think many times the reason people do not react, probably is a kind of part of a human nature, I guess.
Procrastinate, right?
Yeah.
But in business, no decision is the worst decision. If you don't make a decision, you literally leave other people make a decision for you. You have to make it.
Discussion topic: indicators of growth capabilities of new ventures.
Could you kind of elaborate, what do you mean by growth capabilities, and what are the things new ventures should do to develop such growth capabilities, and what's indicated for you to tell you they got the growth capability or not?
Right. So there are 2 aspects. One is as a team, right? As a product and services. If there's no growth, means they don't have additional attraction, right? The market or the service is too niche, too narrow. That's the number 1 problem. If you get this thing done, like only 3 schools like to use it, right? Other schools don't use it. There's a reason behind it. Maybe because they need a lot of customization. It's not the school. So there are many reasons. If you cannot grow, there are many reasons. Your product is not good enough, need a lot of customization, or if the market is there, look at their competitors, right? Their competitor is eating their lunch. That's from this product or services perspective. Number 1 is the person, is the team. People need to grow, right? Managing a team of 10 is very different from managing a team of 100 people.
Yeah.
When you manage 100 people, you're actually managing 10 managers. These 10 managers manage, each manager 10%. So you're managing the team through the managers, right? This 1 layer. When you become a VP, you manage the directors. Through the directors, you manage the managers. And then through the manager, you manage the team. So each level requires different skill set. And nobody has that by nature. So if the leader, if the team don't have the capability to grow in that sense, then they're done. That's why there are serial entrepreneurs where they always grow the company to a certain size, and then they're done. So they're relatively okay, right? They grow the company to $50 million company, they sell it, that's it. And then they do another one, because that's their capability. Managing $50 million venture is too big for them already. So that doesn't mean it's bad, right? But that's the way it is. Right? There are some people who can just manage 10 person, right? So give them 20, give that person more than 10 people, then this internal fight going on, he don't know how to solve the problem. So in that sense, the growth also reflect if the team can manage the growth. can step up, right? So capability is very different. Like to manage most of people can manage like a few $1,000s, right? Suddenly you gave an entrepreneur a $2 million. They literally don't know how to manage. It's very obvious. Yeah, the money just disappear very quickly. It's wasted by team member, by all kind of consultant. They never managed that before. So they have to learn quickly, realize, if I don't take care of it, the money just go out just like water. So, but people never have experience with $1 million companies, $1 million budget, then they have a problem. So they have to learn very fast. That's the millions, right? If you have 100 million, that's even worse. Some people just, you give the more money you gave them, the more money they wasted. So, so that's we talk about the growth. It's the growth of the person, the team. Can they manage more and more money? Can they manage more and bigger and bigger team? Can they deal with more and more shareholders, right?
Yeah, actually, I think that's a very insightful point. Do you have like a quick advice or quick observation? What makes a person be more adaptable to grow? Because which I agree, it's extremely important. So any kind of things you observed to make a person more, ready to grow themselves?
I think for people who grow really fast, it's that's not only IQ. So in that sense, we talk about the EQ, right? I know that's a controversial term right now, even IQ, and now everything is controversial. Anyway, so it's a capability to understand other people. It's a capability to be aware of the surroundings, to be aware. That's something actually really not many people can do that. Sense what's going on around you, sense how people feel about the company, how the people feel about you, about your people. Like, suppose you are the CEO, right? When you talk to people, can you feel how people think about this one of the VPs? Do they like it or they hate it? Or do they really afraid of him or her? So you really have to have a sense of what's going on. And that requires learning, but also requires some talent. Yeah, some people just not aware of what's going on, especially some technical people. Yeah, they are very focused on the things, not the people around them. Yeah.
Discussion topic: uncompromising principles guiding our VC investments.
After such a long, successful journey, in your investment, also in your entrepreneurship, do you have like developed a few, what I call the timeless lessons that continuously remind you when you deal with, investing decisions or evaluating new ventures? It's always like, kind of warn you in your mind, because that's based upon your such a long journey, successful mistakes you made becomes a timeless lesson in you.
Okay. Number one, Professor Chen, I don't consider myself very successful. It's a relative term. I still feel like I have a lot of things to
let's say, based upon your long journey, you must develop some wisdom, right? Timeless.
So from investment perspective, we talk a lot about how the person, the team, the market, everything. But for investors, the number one is the integrity of the team, the startup founders. Because lots of people can make money once and they can make money for themselves. But if they don't have integrity, they could make some money. But as an investor, as a partner, you probably won't, right? With all the stories around you, like Serenox or FTX, I don't want to get into those persons. But yeah, without integrity, some people could make money, but not the investors, not the partners. So no matter how smart, how good so-called they are, if you don't feel they have integrity, don't invest, because there's money there. They could make money, but not for you, not for us. So that's the number one as a, because for example, we met a startup founders, very smart, present something very interesting, up to date. He has started 4 companies. I know all the investors, the previous investors, none of them make money. And he obviously made it already. So he like has some money, obviously. So this time he's doing something really good. We don't invest because this time the result may be similar. He could make some money, but not investors. So there's no integrity there, right? So this person particularly just do something, but not keep this thing in the company for himself. So what we talked earlier about the resilience, right? The collaboration, complementary market, everything, that's good. Then for investors, you have to feel these founders has integrity. Without that, it doesn't matter how good they are. It doesn't matter who invests. Look at the Theranos. Look at the FTX, right? Sequoia Invest, Theranos, like the Secretary of State and the Defense Secretary, right? It doesn't matter who invests. So if you don't feel the team doesn't have integrity, has integrity, don't invest. That's number one. Time, I feel that thing help us, save us so many times. We look at the team, they're so good. They're so good. So many good investors invest, but we see some sign, we just walk away. We just walk away. And as time go by, we feel maybe we really missed something this time. No, as time go by, eventually it will tell you, okay, we were right. Number one, integrity. Then come back to us. Same thing here. As ourselves, as a team, as a partner, we have to have integrity. Otherwise, you lost your trust. In financial world, it's all about reputation. It's all about reputation. But the reputation is based on integrity. Without integrity in financial, there's nothing, because whatever the stock you buy is all about expectation, right? The stock doesn't matter how good they are today, but what will happen tomorrow? Google is good, Apple is good, but their stock price will continue to go up. So it's the expectation. The expectation, good expectation is built on top of the integrity of the team. So that's for finance, the integrity is everything. Then back to us as how to identify a credible team. Number one thing we do is we have to have integrity. Give a good example. Good example. I always give this example to team. For example, if you go to a meeting, I ask people, our team, always be on time, always ahead of time. Why? Because if you are late, you don't even know the other side is late or not.
Yeah.
Right?
Yeah.
If you are early, you can tell the other side is on time, punctual. So same thing with integrity. If you don't have integrity, there's no way you can tell the other side has integrity or not. It's for your own protection. I tell my team, for your own protection, for our own protection, must has integrity. Otherwise, you associate with yourself with all the people you don't know who they are. So you have integrity. Meeting is just an example. If you arrive the meeting on time, ahead of time, then you know the other side is on time. Otherwise, if you're late, there's no way you can tell.
Yeah.
Same thing with integrity. So that's why integrity is for your own protection. That's how we tell every team member in AMINO Capital.
So it's kind of both way, not only crucial, important for entrepreneurs, but also the venture capitalists as well.
Right. That's why we have doing well. In YC companies, they have a book phase. There are thousands of YC companies. They have an internal system YC called book phase. They rate all the VCs. So AMINO is S+, the highest level of recognition. There's a reason behind it. It's for our own protection. I also tell my friends and my partners same thing. Also, I tell the company founders we invested, just for your own protection, has integrity.
Yeah,
Otherwise,
I kind of agree because you're talking about it's a long-term reputation. When you burn it, it's very, very difficult to rebuild.
right.
Discussion topic: why VCs do not like consulting models and how to avoid it.
Our audience probably will be very interested in knowing. You mentioned about venture capitalists, you don't like the consulting type of business model when a new venture, fall into that category. Mm-hmm. Could you elaborate why, at least for AMINO Capital, you stay away from such type of a business model, the consulting business model? What's the business logic entrepreneur need to know so they can just adapt or avoid?
Right. From the customer side, right? If you have a customer, in order to gain that customer, you customize your system so much for them, and then the investment return on your time is not worth it. So you really have to think through your product and services that could be used by many people. If you can use by many people, then this thing is scalable. If it's not, basically, if that customer keep come back to you, need your service, need you to change your system, then your system has a problem. So that's a so-called consulting service. You really need to make something that's scalable. In order to make it scalable, you really to make your system more like an automatic, right? So you have to really have to think from higher level, see how I can design a system or product or service where I can serve a lot of people. So that's the basic things of so-called the market size, right? That's the number one testing of your market size. Because if you're doing too much consulting, it's not repeatable, right? So this is something, because with all the machines, with all the AIs, repeatable work is really can make you more efficient, make the company more efficient. Yeah. So try not to do the consulting business model. Yeah, that's a number one. So same thing with being a team or being a person. Try to accumulate your reputation. Try to accumulate your intelligence. Everything you do, try to accumulate. Just don't do one thing, throw away. Do one thing, throw away. That model is either being a person or being a company is no good. You have to accumulate. You have to make your business snowball. You have to make your reputation, good reputation, like a snowball. Keep going, become bigger and bigger. So that's something the company, once you have this snowball effect, then the company can grow exponentially, right? So then in order to do the snowball, basically you try to avoid consulting business model. Same thing with a person. Yeah, as a person, you have to accumulate, has to grow your intelligence, grow your experience, grow your customer base. So that's fundamentally, you have to grow. Yeah. And you have to grow out of one customer. You just cannot say, I'm just working with one customer. That will few. Yeah. That's the fundamental business. You have to grow.
Discussion topic: advantages and challenges of Asians in entrepreneurship.
Could you comment on the differences between, kind of an entrepreneur with Asian cultural background versus non-Asian entrepreneurs? What are the pros and cons, and what's So maybe you can just comment on that. Not necessarily which one is better, just the pros and cons of different styles.
Yeah. Well, I'm a bias, right? I'm an Asian. So I think as an Asian, one obvious advantage is we are hungry. Okay? We are hungry all the time. It doesn't matter how much money we make, how big the business is. Asian people are hungry, so which is good. So we are hungry. We are very hungry for success. We want to make more money, make the business bigger, We want our kids to go to a better and better school, a higher and higher degree. So that's something I feel as an Asian, I'm proud. And I think that's a good thing. And also, I'm not talking about Chinese only. I'm also talking about the people from India. Right? They're hungry, like they work hard, right? Like the CEO of Google, Pichai, right? So he come to the US when he was 23 or something, and then he become a CEO of Google. It's just amazing, yeah, because they work so hard. Yeah, same thing with many of my friends, like David Wei, right, who become a VP of Facebook. He worked until 2 or 3 a.m. almost every day when he was at Facebook. Same thing with my partner, Dr. Huikan Zhu, who started the Google photo search back in the year 2000. And yeah, like his wife told me he used to work like until 3 a.m. and they were living in the dormitory, and it's so hot without air conditioning. It's just, yeah, as Asian, we're hungry for success. We're hungry for work. I'm proud, and I think that may not be unique to Asian, but I feel strongly about the Asian people in this aspect. Secondly, I think many because of it's not Asia, it's about maybe the culture, the Buddhist culture, and some people from Asian, they are more like mellow, right? Mellow, like they're mild people. They don't want to get into a big argument. This could be good or bad. Bad is sometimes they disagree with people, they don't speak out. That's really bad. And the consequence is very bad. Actually, it's bad for the company, it's bad for themselves. They keep things among themselves and without telling their managers. And if the company has a problem, they don't speak out. But on the other hand, some people, they can endure, right? They see the problems and they work on it hours and hours and days without complaining. And eventually they solve the problem and they achieve the result and they are recognized by people. That's why you see a lot of Asian successful executives like the Pichai or Sante of Microsoft. Also, we see Qin Xie of Fortinet, right? They work very, very hard. So they're hungry for success. They're hungry to do the better work for the customers. So that's what I see from the people around me. Yeah.
Discussion topic: knowing beyond existing customers to grow new ventures.
What's your overall observation or even kind of wisdom dealing with, for new ventures, when they, as you say, they keep inventing, they keep adjusting, either by following the customers or understand the customer's needs, or even predicting the customer needs, or another path by looking at the competitors' threats or competitors' move to influence their change. What's your view? Under what situation you think new ventures kind of need to think about? Because I hear some entrepreneurs, they think the most important thing is you really pay attention to your customer, follow your customer, that's it. But do you have slightly different views or examples to say, hey, that's your view between these two sources to make you change or improve?
Yeah, I think that's a very good question. Actually, as an entrepreneur, I think they're facing this question every day. It's like, do I want to continue to follow what they want? Do I really want to do what I think is right? So it's always a struggle. It's always a struggle. So eventually, it is the learning process of an entrepreneur. You really have to get into what you're doing. So you really need to become a product manager. So the good CEO, good founder team, good executive team, they are really the good PM. So at the beginning, maybe they are not familiar with the business because they got the one trick, they get into the way, they get into the business. But as they get into it, they really need to learn to know more and more. So hopefully at some point they should know more than one particular customer knows, right? That particular customer or that few customers know what they want. But as a product manager, as a team, you're supposed to know more than they do. You need to look further than what they do, because for those companies, few companies, they look at the bottom line. They look at what they need today, But as a product manager or as a team, as a service provider, you need to think ahead. You need to think what other people want in this industry. So don't be fixed by a few people. So but that easy said than done. See, as a company, you always struggle with these first few customers. Do you want to continue to do what they want, and do you want to just broaden your vision, look ahead? It's a very difficult decision. It's a very difficult. That always happens. So that's why I mentioned for the best founder or CEOs, be aware of what's going on. Yeah, be aware of what's going on around you, around the industry. Be aware of what your competitor is doing. Always so-called paranoid, but not scared. Yeah, paranoid. Always think around. Always think what other people are doing. Has to be, be aware.
Discussion topic: good and bad VCs that entrepreneurs need to be aware of.
For entrepreneurs, what are the indicators of so-called bad VCs they should avoid, or they should kind of be careful?
Short-term vision. Like number one is that there are VCs or there are particular investors. He want to see the return on investment quickly. So that's a bad sign. Good investors or good advisors, they want to see incremental result. They want you to make progress. They want to see you making progress every 6 months. They don't want you to do a research like see me in 5 years. No, that's not the way to run a company. You have to make incremental result, but don't expect quick success, especially quick financial returns for VCs. So once those kind of investors get into the way, then they push you to do some stupid things. In Silicon Valley, from zero to a unicorn, if they ever become a unicorn, the average time is 7 years. From unicorn to IPO, on average, is about 3 years. So for early stage company, any VC come in, they want to make quick money, just don't take their money, because they're going to just destroy you. So there's no quick money actually in Silicon Valley. You hear all the stories, but you don't know the hard work before that. Like as you know that we get on the Midas list last month, but we invest in China Bank in 2013. That's 10 years ago. Well, it's a great honor to be on Midas list, but that's a 10 year. So there's no quick money actually, even in VC. Number one. Number two is that particular person has your interest in mind, or is that person want to get another job?
What do you mean by that?
Yes, we have some investors. They are not a major partners of a firm. They are like associates or so-called partners, but they're not the key person in the firm. Sometimes they use the firm's money to invest in the startups, and then they want to become the startup's key person. They want to leave that firm and become your CEO, become your CTO, their own agenda. So some investors, they have their own agenda, not the company's agenda in mind. It happens. So be aware of those kind of investors. They're not really interested in doing the long-term success for the company. They have their own particular interest. So be aware of that. So you can sense if some people like they try to get too involved in a company, that's not right. Yeah, because that's not right, because investor is different from CEOs. CEOs, you have to have a front row seat, right? You really need to to work hard and drive the company, not the investor. The investor is supposed to just give advice. Shouldn't be a front seat driver, shouldn't be a back seat driver. That shouldn't happen. If you feel an investor behave like they want to just control everything, stay away. Stay away. Yeah, they will destroy the company.
Discussion topic: opportunities and advice to young people in the age of AI.
Any kind of advice for the young entrepreneurs, especially the entrepreneurs who are with the Asian cultural background?
As of today, I think a lot of people are concerned about the generative AI because it replaces all the repetitive work. Before, the machine replaced the blue collar work. Now the AI or generative AI replace all the white collar work. That lawyers and accountant and office admin, speech writers, they are very concerned. And it's not only the entrepreneurs, also the very talented young people, they are very concerned about what's going to happen. They're right. Things are changing very fast. So with this kind of technology, eventually the social structure will change as well, right? Before the Industrial Revolution, 95% of the people are farmers, right?
Yeah.
After the right now, as of today, the developed country, right, 95% of the people are not farmers.
The opposite.
Right, it's the opposite. And those farmers lost their land, lost their job, lost their property over time. It's painful. And they become a worker in the city and just sell their labor without anything. So it's painful. But the society move on, right? Eventually getting better. Same thing here. So lots of people, if you're not really good at what you're doing, you'll be replaced by machines, right? If you're just not creative, just sitting there day by day doing the repetitive work, then that's not good for you. It's not good for the company because the company is not efficient, but it's not good for yourself. So that's why I tell my employee in my team, say, try to do some creative. Don't do repetitive work. If you do, please use computer to automate the process. It's not good for the company. If you do repetitive work, it's not good for you because you're not growing. So with this current technology, right, a lot of things will change. But for young people, for entrepreneurs, there are two things you can do. One thing is be creative. Because if you don't creative, whatever you do is not as good as machine, right?
Yeah.
If you article, you write a speech, you have to be creative. You have to have new information. Otherwise, ChatGPT will write much better things than you do. So be creative. Be creative to help people. Be creative to your boss. Be creative to your coworker. Then you have value. Otherwise, you have no value. Secondly, service, right? It doesn't matter how AI will grow. People, as a human being, we have basic need. You need a haircut. The AI won't do a haircut for you. You need a haircut. Because the feeling of a person give you a haircut, do your hair, do your nail, cannot be replaced by machine. The service, the haircut, the cook, the food. It doesn't matter how good is the food. If it's not freshly cooked, it's just not good. Have you ever eaten any good food that's not freshly cooked? Everything, the service. So number one is create, number two is service. But do I mean to tell all the people from universities, all the PhDs, all the professors to go to the restaurant to cook, to do other people's nail, the hair? I don't mean that. Help those people. Help these people who are doing the service, because those people are needed. Their service are always needed. But if you help those people become more efficient, then you will be much more successful. You will make millions, billions. or people don't think, what are you talking about? Example, DoorDash. They are not delivering food themselves, but they make the food delivery more effective, more efficient. Uber, they are not driving the car. Yeah, you always need a car. You always need a driver, at least for now, to drive you around, right? When you don't have a car.
Yeah.
But Uber make those service more efficient. So what I mean is, if you do something, figure out something, make the service industry more effective, then if you good enough, become a platform, you make big money. It's good for the society because those service people, they want to be more productive. They want to be more effective because it's hard labor, haircut, driver, hard labor. They need service. They need your platform to make them more effective, more productive. So two things to get back to your question. For young entrepreneur, what's next? There are only two things you can count on. One is be creative. Secondly, service, focus on service, experience. That's it. You have to do these two things. If you don't do these two things, it doesn't matter. I have a PhD, I'm from MIT, I'm from Harvard, I'm from, so what? If you're not creative, your degree doesn't mean anything anymore. It doesn't matter how high degree you have, because if you're not creative, you can be replaced just by computer.
It's a very good point. I think, so basically the second point is really you need to enable better service. And yeah, and also kind of clearly, these are your vision about the future entrepreneurship opportunities, right?
Yeah. So we don't invest in company that has one trick. Say, I have one patent, I have one patent, I have these things that now I can do, nobody else can do. It doesn't matter for us. If you have one thing alone, or two things alone, it doesn't matter because people eventually will learn. They will copy you. Have to be able to keep making progress. Yeah, one patent doesn't mean much. Yeah, so I have this unique technology. We don't hear that. There's no such uniqueness exists. People learn fast. Sometimes they use the firm's money to invest in the startups, and then they want to become the startup's key person. They want to leave that firm and become your CEO, become your CTO, their own agenda. So some investors, they have their own agenda, not the company's agenda in mind. It happens. So be aware of those kind of investors. They're not really interested in doing the long-term success for the company. They have their own particular interest. So be aware of that. So you can sense if some people they try to get too involved in a company, that's not right. Yeah, because that's not right, because investor is different from CEOs. CEOs, you have to have a front row seat, right? You really need to work hard and drive the company, not the investor. The investor is supposed to just give advice. Shouldn't be a front seat driver, shouldn't be a back seat driver. That shouldn't happen. If you feel an investor behave like they want to just control everything, stay away. Stay away. Yeah, they will destroy the company.
Okay, thank you, actually, Larry. These are very, very good advice. I'm sure a lot of people will learn a lot from them. And so any other things we didn't cover, but you think it's important?
When you have time, read my book. The Logic of Investment. We are working on the English version as we're speaking. So read the book, and then also it's a very different advice. Don't read the whole book if you don't have to. Just pick a chapter that interests you, because this is a toolbox. Nobody expects you to know everything from this book. This is just systematically have to be written like a textbook. But in business, you don't need to do the whole thing. There's no way you can understand everything. Don't read the whole book. But read some part of it. So read the part that you need.
Okay, thank you.
Thank you for watching.